Okay, let's get right into it, because there's this absolutely fascinating story unfolding in the markets right now. There's a total frenzy happening around artificial intelligence, and it has pretty much everyone asking one giant question.
So let's start with a number, a huge one, $22.5 billion. That is the total value of deals for AI computing power between just two companies, the cloud provider CoreWeave and, you guessed it, the creator of ChatGPT, OpenAI. And that's after they just signed a new $6.5 billion deal.
Numbers like that? Well, they're fueling what feels like a massive AI gold rush. But, they're also making a lot of really smart people really nervous. Which brings us to the big question. Is this the beginning of a whole new tech revolution, or are we just watching a bubble inflate right in front of our faces? What is actually going on here?
To try and figure that out, let's first look at the case for a full-blown AI boom. And trust me, the evidence is overwhelming. The money is just pouring in from every single direction.
And this isn't just a Silicon Valley thing. This investment wave is completely global. Our British firm Nscale, which builds AI data centers, just pulled in over $1 billion from a real who's who of tech. Nvidia, Nokia, Dell, they're all jumping in to build out this massive new infrastructure.
And it's not just about the hardware. You've got established tech companies racing to partner up to get AI into their own products. Databricks, a huge data analytics company, is committing $100 million just to use OpenAI's models. I mean, that's basically the price of admission if you want to stay in the game right now.
The spending is happening at every level too. It's not just the giants. Even specialized startups are attracting serious cash. Take a company called Light out of Denmark. They're using AI to automate accounting, and they just landed $30 million from VCs who see huge potential in applying this tech to really specific industries. So yeah, the boom feels very, very real.
Okay, but not everyone is buying the hype without a pretty healthy dose of skepticism. So now let's flip the coin and look at the powerful counter-argument, the idea that this whole thing is getting dangerously overheated.
When the chairman of the U.S. Federal Reserve says something like this, people listen. Jerome Powell's very cautious words about high stock prices, that adds a ton of fuel to the fears that the market is getting frothy, which is basically Wall Street speak for a bubble waiting to happen.
And it's not just talk. You can actually start to see the jitters in the market. The very stocks that have been leading this incredible charge are now starting to stumble. After this massive run-up, key players like Nvidia and Oracle are pulling back. That's a sign that investor confidence might just be starting to shake a little.
This professional skepticism is popping up elsewhere too. The investment bank, Rothschild, just started covering Oracle with a sell rating, and they're predicting it could fall by as much as 40%. And the reason why is really interesting. Analysts are starting to question if all these huge AI deals will actually lead to real sustainable growth for the company's main business.
This quote from an analyst at Susquehanna Financial Group just captures the skeptical mood perfectly. They see this circular economy, where AI companies are basically just spending billions of dollars on each other's products, without clear proof yet of a return on that investment from actual real-world customers.
So, to make sense of all this, you'd think, okay, let's just look at the broader economy for some clues, right? The problem is, the economic data is sending wildly mixed signals. It's like trying to read a map where half the roads are shiny and new and the other half are completely washed away.
I mean, just look at this. On the one hand, the big picture numbers look surprisingly strong. Second quarter GDP growth was actually revised up to 3.8%, and jobless claims are super low. But then, on the other hand, major companies that deal directly with consumers are hitting a brick wall. CarMax saw its stock plummet 20%. Starbucks is closing over 100 stores and laying people off. It is a genuine tale of two economies.
And as if a boom, a potential bubble, and a confusing economy weren't enough to juggle, investors are also getting hit with this chaotic stream of news from totally different arenas that just adds to all the confusion.
Yeah, this uncertainty gets amplified by all this external noise. You've got major political fights, like a potential U.S. government shutdown that could trigger mass layoffs and rattle the whole economy. Things like this, happening both at home and abroad, just create another layer of unpredictability that everyone has to navigate. So, where does all this leave us? We've got a massive tech boom happening right alongside some serious bubble fears, all playing out against a backdrop of economic confusion and political chaos. I mean, is the market brilliant right now, or is it just plain confused?
What you end up with are these two really powerful, competing stories playing out at the exact same time. The boom story says this is unprecedented investment, a new productivity revolution. The bubble story says we've got frothy valuations, stumbling stocks, and a fragile economy. And the hardest part? There's solid evidence for both sides.
The reality is, this isn't a simple case of one side being right and the other being wrong. Multiple truths are all happening at once. The AI investment is absolutely real. It's transformative. But those economic headwinds and the worries about sky-high valuations, they are just as real. And that's what makes this moment so incredibly challenging.
So, at the end of the day, understanding today's market isn't about finding the one correct answer. It's about learning how to weigh all these conflicting signals at the same time. Which really leaves us with one final, provocative thought to chew on. In a market where every signal is flashing a different color, which one do you follow?